Most people fear taxes. But the wealthy? They leverage them. They know something that 90% of people don't. And it's not a loophole. It's not shady. It's completely legal yet rarely talked about. It's a single strategy that could put you 5 years ahead financially, and it starts with one word: depreciation. Wait. What is depreciation? Let's break it down. Depreciation is the IRS's way of saying, hey, we know your assets lose value over time, so we'll let you write off that loss even if you didn't actually lose money. It sounds simple, but here's the trick: some assets don't really lose value. In fact, they often go up in value, and that's where the strategy begins. Enter real estate and strategic assets. Let's say you buy a rental property. It's making you $1,500 a month in income. But according to the IRS, the house is depreciating. So they let you deduct thousands of dollars in paper loss even though you're actually making money. This can erase your tax bill, sometimes entirely, and in many cases, you can carry those deductions forward into future years. That's not just saving money, that's leaping ahead financially. But I don't own real estate. Does this still apply? Yes, and here's how. You don't need to be a landlord. You can leverage depreciation through real estate syndications. Rights that pass through depreciation: short-term rentals, Airbnb, business equipment and vehicles, even solar energy investments. These are all ways to use depreciation to reduce your active income taxes. Not just investment income. That means you can earn more, keep more, and owe less. The real impact: more cash in your pocket. Let's say your income is $75,000 a year. But you invest in a short-term rental and use depreciation. You might write off $10,000, $20,000 on paper, which drops your taxable income. Now, your tax bill drops by thousands. That money stays in your account, it compounds, it builds other income streams. And it puts you years ahead of where you'd be otherwise. This is why the wealthy look lucky. They're not lucky, they're strategic. They understand that the tax code is a map, a roadmap for how the government wants you to behave. Buy property? You're helping housing supply get rewarded. Invest in solar? You're supporting clean energy, get rewarded. Create jobs or provide housing? You're stimulating the economy, get rewarded. And depreciation is the tool they use to claim those rewards in cash. This strategy works even in tough times. Worried about recessions? Layoffs, inflation? This strategy doesn't care because depreciation continues year after year, regardless of market volatility. It's a consistent, reliable form of tax reduction that keeps working silently while others scramble, and that's why people using it often seem to leap ahead even when the economy slows down. Bonus: combine it with this one move. Want to supercharge it? Pair depreciation with a solo 401k or SEP IRA if you're a business owner or freelancer. Now you're reducing taxes on two fronts. Depreciation lowers your taxable income, retirement contributions shelter more of what's left. It's a double win. And it's how smart people get 5 years ahead, not 5 steps behind. Okay, so how do I start? Here's your action plan. Learn where your money is going. Can you redirect some of it into real assets? Explore real estate options. You don't need to buy a house. Look into syndications or fractional ownership. Talk to a CPA who understands advanced strategies. Not all tax professionals are created equal. Automate your deductions. Use software or a pro to track depreciation schedules. Think long term. This isn't a get-rich-quick move, it's a get-rich-quietly strategy. Most people never hear this advice. Why? Because schools don't teach it and tax prep software won't suggest it. This strategy hides in the details, in the fine print of the tax code. Right where most people never look, but it's been helping the wealthy stay ahead. For decades now. It's your turn. The bottom line: this one tax strategy, depreciation, can cut your tax bill, increase your cash flow, and build long-term wealth, all without changing your job, your income, or your lifestyle. It's not a trick, it's not illegal, it's just smart. And underutilized if you want to stop working for your money and start making your money work for you. This is the move. If this opened your eyes, give it a like. And if you're ready to stop leaving money on the table, hit subscribe.